Welcome back, guys, to Crypto Insider. It's been a long time since I made my last video, um, simply because there wasn't that much new things to share with you guys. I think I've been very clear about what's the situation in the market and what you could expect. If you missed it, check my last video. Um, from a bear market, there's a few things you should know and you should expect, which are also like big retraces to take out the shorts, and that's what I exactly explained in my last video. That bull markets they can look, sorry, bear markets they can look as if they are reversing upwards, but that's exactly to trick you into a buy on the top of a local range, and then you become exit liquidity for bigger institutions or for the market maker, and that's not something you want to be. This was my last video. If you missed it, you can check it out. Let's have a quick listen what I said back then in February. And around the 41K, that's a crucial pivot. So if Bitcoin comes back to 41K and finds a bounce here, we could potentially head towards the supply zone. All right, so let's have a look what actually happened here. If Bitcoin bounces from the 41K pivot, we could head for the supply zone. Well, that's exactly what we did. We literally reversed at my supply zone here, at what I call R4. You have to understand this looks very simple, but these levels are based on Fibonacci's and on Sigma levels. If you really want to learn these things, because these are also how market makers run price, I can show you how to do that. You just need to comment or check my Twitter here and send me a DM, and then we can look at these things together. I'm gonna be more available to do one-on-one lessons or coaching, or check your portfolio and see, how I could help you somewhere. I think that's cool. I'm not a financial advisor, for sure not. But what I can do is just give my opinion and my vision on the market and how to best handle your situation. But all right, so let's look at this chart that I made in February. It's I really like this chart because it's still relevant. Like pivot's been like really really well. So we had this channel, we came down, we basically been in this chop zone, and what I said also in in my last video, you come from this severe downtrend here, and then the market maker needs to stabilize and basically lure you into buys and manage, basically farm the liquidity. What does it mean, farm the liquidity? It means that you know you take out the shorts, liquidate the longs, liquidate the shorts, liquidate the longs, liquidate the shorts, liquidate the longs, liquidate the shorts, liquidate the longs. So it's literally trying to hedge a market maker's position. A market maker is, in general, he's long. Why? Because he owns the majority of the coins. Doesn't even matter which coin it is. It's not whales, it's not institutions, it's literally about one guy, and it's the market maker. If you want to know a bit more about this topic, you can follow me on Twitter, but you can also check another YouTube channel, which is Traders Reality, which is a good channel. It's a bit more for short-term trades. I'm a bit more of a swing trader myself, and right now the way I approach this market is I've literally not been holding anything since last November. So because I really want to keep my purchasing power for when we hit bear market bottom. And we're definitely not in bear market bottom territory yet. So as I said before as well, already in my first video that I made back in November, my first video, if you really want to learn what's the fundamental, because a lot of traders are like, okay, price is going up or price is going down and blah blah blah. It's not relevant. It's what's relevant for you as a trader is to understand why the price goes up and down. Why does Bitcoin go to 48K and then reverse, right? That's what you want to know. And as soon as you understand these fundamental aspects behind price, that's where you get much of a better trader. And if you want to learn more about this, you can definitely hit me up. I'm gonna do a bit of private coaching. I think it's just something for me that I'm like, I'm not gonna be some fucking crypto influencer. I can be bothered by it, but I can help people one on one for a bit of a fee. But I think it would help your portfolio massively. At least I'm doing well. I hope you guys are doing well. Um, let's see where we're at. So last video I said we were in between this 800 and what was it again? 2200 moving average. So interesting already in this zone here, in this chop zone. We had this options expiration here in February. Pretty much we have this max pain price. We just had an options expiration here. It was 40K, and in February it was 41. So it's really these options expiration, this max pain price is very much around this 41K level here. I mean, we hit 40 here, which it was literally just a few $100 shy of the max pain price, which means max pain just means the worst for the market and the best for the market maker, for the options market maker. So let's have a look at the stock market. So crypto has been chopping around, not too much to tell, honestly. Like what we want to see here for Bitcoin is the first point of interest is to recover this area here in the wick. So that would be the 37 till 35K zone, and then we have this zone here as well, and so crucially we want to see if Bitcoin is going to break this 2200 EMA on the 8-hour chart. That's going to be pivotal, because then we could really hit that demand zone and potentially just go straight to 30K. There's still tons of long liquidations here in this zone. So, but then obviously now we're building shorts as well. So I wouldn't be surprised if Bitcoin does something like that, or, goes up a bit, gets everyone's hopes up and then go down. Like they will definitely want to farm as many longs, which are market maker shorts, in order for them to smack the price down. So let's look at the stock market. Stock market is very interesting. I drew out this level here at the 41.55. We had this massive bounce here, and then everyone got bullish. Obviously, it's the standard for everyone to get bullish in a dead cat bounce. It's very normal to just see these bounces because they're basically taking out the shorts. And I had two zones of interest that I already drew out when we were up here. I had this zone here, which was hit, and had this zone here, which was also hit. And we're basically now, we're still above like our lowest low. We're covering this little wick here. Next week will be very interesting because we have the Federal Reserve meeting again, and Fed's futures market are a bit contemplating somewhere between a 50 and 100 basis points hike. I think 50 or 75, I would say, which is a severe hike. We haven't seen these big hikes for a while. But yeah, I've been repeating myself over and over and over and over again. We're definitely in for quite a severe bear market. That's just where we're at right now. And on the long term, where can the stock market go? I think it depends a bit on the policy of the Federal Reserve, but they don't have much of a choice to really get inflation under control. So I want to see the stock market hitting this macro trend line, which would mean another 35%, 36% drop from where we are right now. And obviously, most of the time we're not going to just go straight down. We're gonna go like something like this, and trending towards that line on a longer time frame. So let's look at crypto. Total market cap, I found something interesting here. I just found that I thought this was quite interesting because this is basically a channel that we're trading in. Here we had the top of the channel was support, and then we flipped that into resistance here, support, and we broke out. We had our last run of the bull market, and then we broke back into the channel where the top of the channel is clear resistance and the bottom is clear support, and we're about to hit support again, which is obviously very interesting to see whether we gonna hold support here or not. If not, like obviously, a zone of interest, you can draw it out, is obviously this huge green vector candle, because that's the last time the market maker was building longs, which was shorts actually here, because we just came from this downtrend. People were like, oh, Bitcoin's gonna fall to 20K. Short. Market maker goes long, and then he reverses the trend and wipes out all the bears. And he's gonna, and he did the same with the bulls, basically wiping out the longs here, because then it was building longs for retail, and the market maker was short, so he takes his profit in that way. So I think it's very advisable to follow me on Twitter. I had this chart last week. I give some calls, like more for the day traders. I pointed out this crucial resistance here at the 43K, and we basically hit this level here, and then we smack back down. You can see from my fractal that this kind of behavior is possible, to go back to the 33K, but it might not be in a flash crash like this. But that's definitely, this 33K is definitely a zone of interest. What else do I have for you guys? Let's see. Yeah, I want to just go over my thread, because I think this thread is very interesting. So let's just go over what I said here. Thread on projected volatility on price action for the interesting month of May. Options market rule the price action for Bitcoin on the mid and the long term, while futures rule the short-term price movements. So I wanted to just show a little bit around the options and the futures market. So options are calls or puts that have an expiration date. That's basically a long or a short. And futures, you might know that from leverage, where you can place a long or a short, and you can cash out this specific trade at any time you want, really. So since Bitcoin peaked in November, market makers have started their markdown phase, front-running indexes across the globe. So basically, they're already anticipating a stock market bear market. And so what they are doing is basically front-running the stock market. So they already anticipate much lower prices, and then when people start to panic, they already brought the price down much more at a point where they can actually start buying, because then they can pivot up. And that's exactly what they did here. You know, when the stock market came down, was kind of here, they just start buying, and then they mark up the price so they can sell their Bitcoin at a premium, at a higher price. So the futures market formed the first hedge against a market maker's general long positions, what I just said. That's why they distribute at a premium and use retail longs as their shorts. That's also just normal, because if you go long, the market maker is short. There's always someone at the opposite side of a contract. Cascade liquidation by sudden crash in price. Bitcoin did that on Saturday, December 4th. That was this move here. This one. This one is December 4th, and that was in the low liquidity hours, low liquidity time of the weekend. So, and then you can also see how that affects open interest. This is a long versus short ratio. This is for retail. So retail was long at the end of November, which means market maker is heavily short. And if he keeps prices going up, then he just loses a lot of money, because then people are gonna either close their longs or put stops in profit, etc., etc. So he smacked that back down, and you can see that most of these this decline is just liquidations or stops being hit. And so you get this cascade of liquidations, because you liquidate one person, which means it's an automatic sell of the Bitcoin position. If you have a long and you get liquidated, it's a sell. If you have a short, you get liquidated, it's a buy. So by triggering all the liquidations and all the stops, it's sell, 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 sell in a time where it's low liquidity. So the order book is not that packed with orders in the weekend. This means a flash crash, because it's stacking cells up on top of each other. So while cashing in free Bitcoin, which basically they get free Bitcoin because you just literally give free money to the market maker. The market maker runs at-the-money puts to hedge their immense balance sheet. So at-the-money puts are, simply said, you have options that go for a longer time. They have an expiration date somewhere in the future, next month, 3 months, 6 months, 1 year. And you have at-the-money options, which are very close expiration dates. So they can be like, I put one now and in 8 hours it expires, or tomorrow expires. So the market maker can prepare a drop in price by putting these at-the-money puts just before they mark down the price. So options dealer have to sell into weakness, thus further pressure on price. Market maker redistributes their free inventory at the highest possible premium while building degen longs, so retail longs. Win, 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 win. So this means, like option dealers, they have something that's called gamma, whatever it's called, which is basically the general position. If a lot of people are short, market maker does tend to mark up price to take you guys out, but he has to basically, an options dealer has to trade with the price. So if prices are going down, the options dealers are going to sell into weakness and buy into strength. So they basically trade with the price action. That's basically what they're doing. So if we look at the chart, then we can understand what's behind price, and that's the whole point what I made at the beginning of this video. You need to understand why price moves like it is. So you had this M formation here, this last run up, because here maybe people thought, okay, now we're going to go down. They run the last peak and liquidate the shorts and build as much retail longs, which is market maker shorts. They put in their puts and they start marking down price all the time while trying to take out as many shorts with these bounces, smack it back down. This is that liquidation cascade. And you can see where this wick ends. It literally ends where we started this whole uptrend. So basically means they covered this whole latest uptrend this was October, November. And then they have this redistribution phases, which means they get all these free Bitcoin here. They can sell this here in this range, and then they smack it back down again while putting their puts. And then they get free Bitcoin again. They redistribute it again, put a put, bam. And again, liquidation cascade. And then here they really accumulate it. This is where I said, like, they front run the indexes, because at this point the indexes also came down, and that's where they can buy, because now the price is low enough for them to keep price in this zone. That's why it's a chop zone as well. So, well, same story here. You have a redistribution at the top of this range and basically accumulation at the bottom of this range. Now the question is, are they gonna keep this accumulation zone intact, or are they gonna drop lower and have an accumulation zone, let's say at the 30K or the high 28, 29K? Could be. The point of imbalance is that what I just showed you guys as well. Point of interest is between this, let's say 37 and 33K. That's also where we're heading right now. But that doesn't mean, we could definitely see on Monday that they take the shorts out before they go there, or they do one last run up. That's something we will have to see. But in May, they have the room to bring price wherever they want, and I will show you why. So the result is that option dealers force the max pain price down by selling into weakness. Yeah, so they trade with the trend. Institutionals have out of the money call positions. There were a lot of people that were long. That call position is a long, and they close those positions. They move out of the money, which means a losing position. So they sell it off, and the selling on spot as well. So you have these crashes. People have stops. Institutions also get fearful, whales also get fearful, and they also sell. Like, people always think that whales and institutions are, always making the right calls. It's not true. Like, the only person that always makes the right calls is the market maker. So you can see that this is the max pain price. That's the actual price, the green line, and you can see that they force max pain down. You can see that there's a really big difference, and the options dealer just fixed that by getting the max pain price closer towards price, and then they start hitting it as well. See the end of February expiration, they are already very close to price. End of January expiration, they exactly hit it. End of March expiration, fairly close. End of April, a bit above, but fairly close again. End of, what are we now? Oh, sorry, this is end of April. We're again fairly close. So that's basically what they're doing, always trying to gravitate towards the max pain price. So if we look at the open interest for April, now with this one we just had, and then you see very low interest. Open interest is basically the amount of calls and puts. Is very low on the 6th of May and 13th of May. And the end of May, it's a bit bigger, but the mid-yearly expiration at the end of June is a very high one. But you can still see that calls, so the people that are long between brackets, are much higher than the people that are short and that are puts. So still there's way for the market maker to just to get these guys out of the money. Maybe they have to pay these guys, but they have to, that's profit. The difference between this and this, that's the profit for the market maker. So, but you can see that there's very low open interest here, which means they don't have to take into account the futures market that much in May, because there's not that much going on. So that's the great thing for them in May, where they can really run price down a lot. This one we already had. So that's the story for May. They have the flexibility to run the price really towards lower levels. If they're gonna do that in May or maybe in June or in July, again, I keep saying this, it doesn't really matter. Like, what matters is that you understand why price can move to a certain price point, and when exactly it does that is less relevant. Like, especially if you're a holder, you just want to know the fundamentals behind the market. So you can check out my first video. I mean, I would definitely just scroll through my videos, because I explain a part of the market in each video. You can follow me on Twitter as well, which would be cool. I give calls here as well. Sometimes I give a trade that you can just short-term trade. And you can also check my trading view. I have this weird name on trading view. Well, so I talked about the dollar going up, which you can see it's been pumping quite a lot since my last analysis. We were below 100. This is also quite interesting, the DXY. This has everything to do with the Federal Reserve. So this is the local range that we were in for since 2015. In my opinion, we were gonna break out. We did so, and I believe this is a point of interest for the long term, not for next week, not for next month, but for the long term. This could be a pivot down again, and that's most likely also where we're gonna see a bottom of a bear market. But right now we're not there yet, and I do also expect dollar to come down a little bit next week. It's gonna have a little sell the news event with the Fed. But for the long term, I do still expect a strong dollar. All right, that's it for today, guys. I hope you appreciate this video. Hit the like, hit the subscribe, send this to your auntie that FOMO'd into Bitcoin at 69K, or to your friends that thought that was a bear market bottom. Especially look at my previous video, because there I explain how these bear markets work and how they trick you into thinking there's a bottom. And then we see each other at the next video. Peace.